Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 27th of January 2020. So yep, welcome everyone guys. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, now then, just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah guys, I believe you can find a lot of useful stuff here for yourself, so feel free to visit us here on jfdbank.com and click on the research tab right here. Now then, let's jump into the charts. Now the first one on the touch on here is the German DAX. Now I talked about DAX a lot last week, and basically I was telling you guys to keep a close eye on certain key potential breakout levels. Now if I zoom in here a little bit, of course, overall you can see that we are still trading above this medium-term upside support line taken from the lowest point of August. But from the shorter-term perspective, what I was saying, that if we get a drop below this little area of support near the 13,513 zone, there could be a possibility for this one to drift lower. We did get that exactly, and last week on Friday, the indices sold off, and the cash indices on the European Stock Exchange and across the board and across other indices which were closed at the time of the US session. So they all kind of drifted lower, and basically looking at the technical picture right now, we saw a nice drop below the 13,513. The price is currently balancing just around this territory right here near the low of the 23rd of January, and that's around 13,386 mark. Now if this continues to hold, then we could see a nice rebound, but to be honest, it's not far from the this medium-term upside support line that I've mentioned. So in a way, there could be a possibility for us to see a test of this upside line, and yep, then we'll take it from there. Because if this upside line starts getting broken, well, if it starts let's say losing its ground or like failing to withhold the price, well, I mean, this could turn out to be ugly for the index, and we could see deeper declines. But again, for now, we'll take it carefully and cautiously. So because as you can see, we also had like a test of this upside line back here in January, on the 6th of January. So that's why, like I said, we'll be very careful and cautious and see how it performs around this upside line. But for now, the main question here is, can it actually drift further south below the 13,386? If it can, then yes, we'll aim for this upside line. If by any chance this suddenly reverses back to the upside and pushes back above the 13,513 mark, well, I mean, the upside could be back on the table. The only thing is still for us, as I've mentioned previously, for us to get a little bit more comfortable with higher levels. Ideally now we would like to see a push above the 13,640 zone. So let's see if we can see such a move, but again, for now it's leaning more towards the downside. Gold. Now, of course, understandably, gold is becoming attractive as a safe haven, and this is what I talked about last week. Basically, if we get a push above this barrier right here, the 1568-69 zone, then in a way there is a possibility for this one to drift further north. Our other target that we were aiming for was and actually still aiming for the 1595 mark, marked by the high of the 8th of January. Slightly above that, we do have the 1611-1612 zone, which is the currently the highest point of January. So in a way, for now, given that we already had a nice upshoot here, overshoot, we could see maybe something like this happening, where a small correction could happen, and if the price remains above the 1569 zone, then we could see another rebound and a push back to the upside. Of course, you can see that the commodity is trading above this little short-term tentative upside support line taken from the low of the 13th of January, and for us to consider the downside, at least, or should say at least a deeper correction to the downside, because don't forget that we are still also above this this kind of medium term, or at least maybe still a short term upside support line taken from the low of the 26th of November. So in a way, if this shorter term upside line breaks and we see a drop below the 1551 zone, well, I mean, this is where we will start aiming for lower levels. And let me just quickly put this on the chart again. But for now, it seems that the investors might continue being attracted to gold as a safe haven, because if the equity markets will continue to slide, gold could continue drifting north. So that's why, guys, for now, be very careful. Any throwback is considered an opportunity for the bulls to step in, but again, still be very careful, be very cautious, and let's see how this is going to play out. AUDUSD. So last week I talked about this one as well, and what I was saying, that we're waiting for a breakthrough one of our key areas of support and resistance. So we got to break not only below this upside line here taken from the low of the 2nd of October, but also what I was saying, that if we do get a break of this upside line, then we also need to see a drop below the 0.6823 in order to consider further declines. Now, one of our levels got met perfectly, which was the low of the 10th of December, and that's roughly around the 0.6797 zone. So the rate, you can see that the rate is currently balancing around here. If the area continues to provide decent support, we may see something like this, where a small rebound could push the pair back towards the 0.6823 zone. But if it struggles to overcome this, this could lead to another round of selling. So that's why, guys, for now, how you could, long story short, basically, as long as it remains below the 0.6823, we will continue to aiming lower. Our main target for now is the 0.6751 level, which is the low of the 29th of November. In terms of the upside, of course, ideally we would like to see a pushback above the 0.6885, 88, and yes, we will keep that on the chart. But in case this, let's say, starts pushing back somewhere around here, somewhere above the 0.6857 zone, which is the high of the 24th of January, then we will consider a possible move higher. Still, we'll be very careful here, because we do have some obstacles here, key resistance obstacles, so like the EMAs here. So yep, that's why, guys, we'll be very careful. But for us to get a little bit more comfortable with higher levels, a push above the 0.6888 zone would be needed. So keep your eyes on this one. This leads us into GBPUSD. Now, if AUD continues to slide, well, I mean, for now the pound is maybe not the strongest one, but still in this pair, the weakness of the Aussie could drive GBPUSD to the upside, GBPUD to the upside. So for now, what we're looking here for is, of course, a key break above the 1.9225 level, because, and if we do get a break above this area, then yes, this would confirm a forthcoming higher high, and we could start aiming for the 1.9387 or even above that. For now, we'll be very careful. Of course, like I said, it is leaning towards this this idea, but we need that. The way we would look at it is, if we would get a nice close of at least a full 4-hour candle here, then yes, we will aim for further upside, because don't forget that we may see some false breakouts as well. So keep your eyes on this one, guys. In terms of the downside, well, it's pretty straightforward. A drop below the 1.1992 zone could clear the way back towards this this medium-term upside support line taken from the low of the 29th of July. So you can see how important this line is, and of course we're not gonna drag this one further down. For now, we would like to see, or should I say not for now, but in this scenario, if we see a drop below the 1.1993, then yes, we would like to see a test of this upside line, and then we'll take it from there. NZDJPY now, also something that I've mentioned last week, and basically it was comfortably trading above this medium-term upside support line taken from the low of the 2nd of October, and as you can see, this is what happened. So we managed to break not only this upside line but also this key area of support, which was the low of last week near this 71.90 zone. You can see that the rate dropped below this and currently balancing lower. So in a way, any kind of let's say pullback here to the upside, and if it's, let's say, struggles to push above the 71.90 level, then we could see another round of selling. So in other words, basically for now, the short-term outlook for us is more to the downside. Initially, we'll target this 71.23 zone, which is the low of the or the current low of January. Let's see if the pair can remain above this by the end of this week. If it cannot, then, well, I mean, we could see a new low for January, and this could lead towards further declines in February as well. So keep your eyes on this one, guys. Very interesting developments here. Of course, understandable if the equity markets are on a slide, on a slight slide, then yes, yen buying is increased, and you can see that across other pairs where the yen has strengthened as a safe haven for investors. So that's why, guys, for now, the scenario is to the downside. But we'll be very careful near these key areas of support, and then we'll take it from there. And of course, the last pair for the session is going to be the euro dollar. Now, last week also the pair drifted nicely to the downside. It continues to remain, of course, below this short-term tentative downside resistance line taken from the high of the 31st of December, but given that it already had a decent slide here, we will consider a possible correction, maybe a bit higher here. Now let me just adjust this level, because this is probably, we're gonna shift and just mark the current low near the 1.1019 zone. And in a way, given that we had a nice hold up here, you can see that the rate is trying to make its way back to the upside a little bit. We do have another potential tentative downside line here, which we will keep an eye just in case. And this one's taken from the high of the 16th of January. So this is a bit of a short term and a bit of a tentative one. Yep, like I said, guys, for now, we could be seeing a small correction, given that we had already a decent slide here. But again, don't get the bulls should not really get their hopes up too much, because in a way this could, if it continues to trade below this little short-term downside line, then we could see another round of selling straight away, which potentially could lead towards the psychological 110 zone, or slightly below that we do have the 1.0980 mark, which could be a nice target as well. That's the low of the 29th of November. So yeah, guys, or in other words, the lowest point of November. And if we do see a move towards that area, then we'll take it from there. For now, we'll be very careful. Like I said, we are not excluding a possibility for maybe a small correction, given the steep slide that we had last week. So but even then, like I said, it could be tricky for the buyer still, because we do have a lot of resistance obstacles here for euro dollar. The only way for us to, let's say, start getting a little bit more comfortable with higher levels is if we would see a push above all these downside lines, and a push above the 1.1118 zone, and that's the high of the 21st of January. So or in other words, the high of last week, and only then we will aim for the upside. For now, guys, it's leaning more towards the downside. First, we may get a bit of a small correction, but again, like I said, overall from the shorter term perspective, we are leaning more towards the downside. So keep your eyes on this one, guys. Okay, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my trader's tea time, as always, that's 14:15 GMT. For now, guys, I hope you have a beautiful start of the week, beautiful Monday, beautiful trading day, and yep, like I said, I'll see you later at my trader's tea time, 14:15 GMT. Thank you very much, and bye-bye.